The Employees Provident Fund, as the sole unit holder of Alpha REIT, has taken the decision to terminate and wind up the unlisted Sharia-compliant REIT. An EPF spokesperson told The Edge that this is part of its portfolio rebalancing exercise that it carries out on a yearly basis. The winding up process will involve the disposal of all assets and properties of Alpha REIT in accordance with the trust deed of Alpha REIT and the Securities Commission's REIT guidelines. The EPF had resolved to apply for and convene a unit holders meeting on December 16th, in which a special resolution was passed to terminate and wind down Alpha REIT. In a statement, Alpha REIT managers said the decision to terminate and wind up Alpha REIT has been taken by the EPF of its own will and at its sole discretion. It added that further details will be provided in due course. Alpha REIT is a Malaysia-based Islamic REIT primarily investing in education or education-related assets locally or overseas. The REIT was established on June 30, 2017 and approved by the SC as an unlisted REIT with the intention to list on the main market of Bursa Malaysia in the near future. Since its inception, Alpha REIT has successfully grown to deliver a market-leading total run with a yield of over 6% for the financial year ended December 31, 2021. Two of its assets also won Edge Prop Malaysia's Best Managed and Sustainable Property Awards 2021. It has three properties, namely Sri KDU Schools in Kota Damansara, the International School at Park City and Eton International School. The existing long-term lease/tenancy of Alpha REIT's assets will remain intact throughout the divestment process and should not have any impact on the operations of the schools, the REIT noted. As at December 31, 2021, its total assets under management stood at 428.6 million ringgit. Gamuda, via its unit Gamuda Australia, has bagged a major road transport project from the New South Wales government worth 1.029 billion Aussie dollars. A 60-40 JV of John Holland and Gamuda Australia was awarded the contract to deliver the Black Hill to Tomago package of works for the M1 motorway extension to Raymond Terrace. The works include 10 kilometres of greenfield dual carriage highway between the M1 motorway at Beresfield and Tomago, major interchanges at Black Hill, Taro and Tomago, and the construction of 9 bridges, including a viaduct of approximately 2.6 kilometres long across the Hunter River and floodplain. In a BOS filing, Gamuda said that it expected to recognise a revenue of 1.21 billion ringgit from the project and that it will contribute positively to top line and earnings for the financial year ending July 31, 2023. Gamuda said delivery risks will be mitigated through comprehensive geotechnical investigations and using well-established techniques of piling and bridge component installations used commonly in Australia. The project, scheduled to begin in mid-2023, will create social benefit initiatives within the local community and wider Hunter region of New South Wales during construction. Serba Dinamik Holdings said the issuance of its 2022 annual report has been delayed as the audited financial statements, together with its auditors and directors' reports for FY22, have not been completed, Bernama reports. The PN17 company said this is mainly due to the board of directors still working on resolving the outstanding audit fees issues with the external auditors. In a BOS filing, Serba Dinamik said that it would make a further announcement as and when there is a material development. To recap, on December 19th, the financially distressed oil and gas services provider said that if the group is unable to submit the outstanding 2022 annual report on or before December 22nd, trading in the company's securities will be suspended with effect from 9 a.m. on December 23rd until further notice. Serba Dinamik was the second most actively traded counter on the bourse today, with over 83.86 million shares changing hands, even as the counter ended Thursday unchanged at 1 cent with a market value of 27.95 million ringgit. Yinson Holdings' net profit rose 58.16% year-on-year to 155 million for its third quarter of FY23, mainly due to higher contribution from its engineering, procurement, construction, installation and commissioning business activities. Revenue improved by 11.8% to 1.73 billion compared with the 820 million posted in the third quarter of FY22. Yinson said the higher contribution from the EPCIC business was partially offset by an increase in finance costs of 129 million. The group said it would continue to apply measures to prudently manage inflation risks, including hedging, effective forecasting, diversification of costs across geographical markets, factoring inflation risks into its contracts, and strategic management of its inventories. Yinson says that it expects to achieve satisfactory results in FY23 and that it is confident of the group's ability to stay resilient amidst rising global economic challenges. The Ministry of Transport says that of the $74.96 billion it will cost to build the East Coast Rail Link, the construction cost comes in at $50.27 billion, while the other development costs amount to $24.69 billion ringgit. MOT said that the development costs involve the interest during construction, land acquisition, utility transfer and connection fees, as well as operating expenses. To recap, the original cost of the rail project, which was launched back in 2017, amounted to 66.78 billion ringgit. ECRL 2.0 was then revised to 66.02 billion after the change in government in 2018. According to the cost breakdown by the MOT, the overall cost of the ECRL 3.0 is higher than that of ECRL 2.0, mainly because both interest expenses and construction costs have soared. The MOT statement came after Prime Minister Datuk Sri Anwar Ibrahim announced on December 21st that the overall cost of the underway project has been reduced by 11.01 billion compared with ECRL 1.0. The ministry said that ECRL 3.0 managed to bring down the construction cost against the ECRL 1.0 through contract renegotiations.